fair treatment of creditor. So if our debtor thinks that he is overloaded with his with many liabilities and unable to pay, then he can go for court and file for bankruptcy. So this process basically ensure that uh, there will be a fresh start for the honest debtor as well as an orderly and equitable distribution to the creditor. So there are different chapters that covers this bankruptcy. So we have liquidation chapter that is covered under chapter number 7, then chapter 11 which covered reorganization, and chapter 13 which covered adjustment of debt. Liquidation is basically, these are for individuals, whereas reorganization are typically bankruptcy process for businesses. Chapter 7 is also filed by partnership corporations, but Chapter 11 is mainly for the businesses like partnership and corporations. Chapter 13 is only available to the individual, okay, having their debt less than certain amount. Next, there are voluntary or involuntary bankruptcy. So, voluntary means when a debtor itself file the bankruptcy petition with the court, whereas involuntary means when someone else, like creditor, forces the debtor to into bankruptcy. So, basically, your involuntary bankruptcy covered under Chapter 7 and Chapter number 11, whereas your Chapter 13 bankruptcy is only for voluntary. Is for voluntary bankruptcy. Okay, so when a debtor files for bankruptcy, the court issues a order of relief, which is called the automatic stay, which basically protect the debtor from the all the collection efforts that is made by the creditor. So this basically this prevent creditor from racing to seize asset and protect debtor from the harassment. So when we file for bankruptcy, a automatic stay is issued by court. A trustee is also created. Trustee means the basically who will look for all the asset of a debtor and will overview all the processes. Okay, so this trustee can be appointed by your creditor or can be appointed by the court. So it basically serves as the representative of the estate. Okay, so the role of trustee is basically to look all the process of bankruptcy, to collect all the assets, all the properties of debtor, and to liquidate it and to distribute it to the creditors. So next is dismiss or conversion of Chapter 7 case. So when does the Chapter 7 bankruptcy will be converted or dismissed? So basically, if a Chapter 7 case may be dismissed or converted to Chapter 11 or Chapter 13. So it may be dismissed or converted when there is unreasonable delay, there is failure to give the required documents. So when the debtor file for bankruptcy, they need to submit certain documents to the court. So in case if they have failed to submit these documents, then in that case their case may be dismissed. Okay, so required documents, basically we have some list of creditor, their addresses, their schedule of assets and liabilities, their schedule of current income and expenditure, their financial affairs. So in case if they are failed to provide these documents or abuse of bankruptcy process, there is unreasonable delay. So in this case, this bankruptcy case may be dismissed. Okay, so in case they have some inadequate records, okay, they are refusing to explain the loss of asset, they are there involves certain fraud kind of thing. So in that case, the Chapter 7 case may be dismissed, or it can be converted into another chapters. The court evaluate the debtor's conduct, financial situation, their compliance with the bankruptcy requirement. Next is abuse under mean test, means the bankruptcy court may dismiss a case for abuse if the debtor fails the mean test. So what happens? So there is some mean test required in case if the debtor is failed to meet this mean test. So in that case, the court may dismiss a case. Just a minute. Please wait for 1 minute. Okay. So we were discussing about abuse under mean test. So like if as a debtor you are filing for bankruptcy, then you have to fulfill certain criteria which comes under mean test, means your income should be like if your income is above certain threshold, that means you are able to pay your debt. In that case your bankruptcy will not be filed. Okay, so in case if the debtor is failed to meet these criteria, then this case may be dismissed. If disposal income exceeds statutory limits, so there are certain limits. So if their income is exceeding those limits, then conversion to Chapter 13 may be required. So Chapter 13 basically where there is a voluntary conversion. Voluntary conversion, again, as I told you, when the debtor has right to voluntarily convert a Chapter 7 case to Chapter 13 if eligible. So conversion allows the debtor to repay debt over the time rather than the liquidation. So basically what happens under this conversion? So a debtor is allowed that he can convert from Chapter 7 to Chapter 13 bankruptcy, under which he has the right to repay his debt over the time rather than the liquidation. Okay, so rather than selling all the asset at a time and paying for the creditors, they have they have the right that they can repay their debt over the period of time. Next is involuntary conversion, means creditor or the trustee may request conversion if the debtor engaged in fraud, concealment of asset or other misconduct. So when there is certain fraud kind of things are involved, then uh, this conversion can be happen. Next is court authority. The court has broad authority to dismiss a case or convert a case in the interest of creditor or in the bankruptcy state. So depending upon the situation, the court has the ability that they can convert this case which is more aligned towards the interest of creditors. The goal is fair treatment of creditor and proper administration of the assets, so that assets are distributed fairly among the creditors. So, for example, a debtor files Chapter 7 bankruptcy, but he has high disposable income and luxury expenses. So, in this case, the US trustee files a motion to dismiss for abuse. So, in this case, since he has unnecessary luxury expenses and his income is disposable income is also very high, so in this case the court can dismiss it as for abuse. The court instead convert this Chapter 7 to Chapter 13, requiring the debtor to itself prepay the creditor for over the 5 years. Okay, is it clear?
Yes.
Okay, so next is who may be a debtor in these various type of chapters. So under the US bankruptcy code, the eligibility of a person or the entity to file for bankruptcy depend upon the chapter under which relief is sought. The not all the individual or business form qualify every chapter. So under this chapter, there are certain classification which certain exemptions also, like which can't file for this bankruptcy and which can file for this bankruptcy. So for chapter 7, this bankruptcy can be filed by individual as well as partnership, corporation, and LLCs. It may be voluntary filed or it may be involuntary filed. Restrictions that a person may be denied chapter 7 bankruptcy. So if they fail to meet the mean test, that means if their disposable income is high, like above certain threshold, okay, so that means they are able to pay their debts, still they are going for bankruptcy. So in that case their case may be denied and may be converted into another bankruptcy chapter, or if they have such prior bankruptcy filing or have engaged in fraud. Okay, under chapter 7 there are exemptions also, like if someone is related to railroads, insurance companies, so if someone's business is belonging to insurance kind of thing, banks, savings and loans, and small business investment corporations, so these are not a can't file for chapter 7 bankruptcy, so these are not covered under this chapter. Railroads, insurance companies, bank, and small business investment. Okay. Next is chapter 11 bankruptcy. So chapter 11 bankruptcy is basically filed by the businesses. So it include your business like partnership, corporation, not individuals, may file chapter 11 for reorganization. So it basically is a kind of reorganization thing, means your all the debt is restructured. Here no trustees also involved, and this kind of bankruptcy chapter is also not available to your brokers, your insurance companies, your bank, and small business investment. Okay. Next, chapter 13 bankruptcy is can be filed voluntary. It can be filed by your individuals with regular income, so they may file for chapter 13 bankruptcy. Okay. So depth limit is there, like chapter 13 is available only if secured and unsecured depth falls below statutory threshold. So if you have your depth above certain amount, then only in that case you can voluntarily file for this chapter 13 bankruptcy. Otherwise you will be not eligible. Any doubt?
No.
Okay, so as I told you, exemptions, so which do not covered under this bankruptcy chapter. So railroads, insurance companies, bank, credit unions, and small business investments. So these cannot be a debtor who can file for these bankruptcy chapters. Next is example, ABC Insurance Corporation cannot file for bankruptcy under the bankruptcy code because insurance companies are exempt. So if someone has someone is insurance company, so they can go for chapter 7 or 13 bankruptcy. Instead, they are subject to state reserveship clause, however, John an individual. So if someone is an individual, then he can file for bankruptcy depending upon he is eligible for which kind of like chapter. Okay. Okay, next is rights and duties of debtors under bankruptcy chapter. So debtor must file complete and accurate financial disclosure, including the schedule of asset, liability, income, and expenses. So when a debtor is filing for the bankruptcy, then he has the duty to submit certain documents to the court, like related to some financial disclosure, related to his asset, liabilities, their fair market value, their list. Okay, his current income, his expenses also. Chapter 7, the debtor must cooperate with the trustee, surrender non-exempt asset, and attend 341 meeting of the creditor. So what happens when you are filing for Chapter 7 bankruptcy? Then there is some creditor meeting. So generally it is held between 20 to 40 days after the order for relief. So the this meeting notice is basically sent to the all creditors, bankruptcy trustee and debtor. So it basically creates the opportunity for creditor to examine the debtor. So this as a debtor you has the like duty to attend this meeting. Next, if we talk about chapter 11, the debtor usually become a debtor in possession and continues business operation while preparing a reorganization plan. So this chapter is generally filed by your businesses. So if you are filing for bankruptcy, it doesn't mean that you have to stop your operations. You can continue your operations while the you are filing for this reorganization plan. Debtor must refrain from fraudulent transfers. So, as we discussed, like if discussed when we talk about suretyship, similarly in this case also, like if they are doing some fraudulent transfers, like transferring their money, their property to someone else, uh, to prevent it from seizing. So, this should be avoided. Debtor must have the right to automatic stay, which holds most collection action immediately depending upon the filing. So when a court gives the stay order, automatic stay or order for relief, so it means that debtor has the right that he he is prevented from the all the creditors action to collect the debt. Next is rights and duties of creditors here. So creditor has the right to file proof or claim to participate in distribution. So since this is a legal process, so no, any of the person cannot come and claim that he has the obligation and please give the assets of the debtor to him. So this is not happen. So basically, if you want that you have the priority, you have the priority for to get these distributions first. So as a creditor you have the duty to file for uh, proof of claim. So basically you have to give the proof that you how much money the debtor owes to you. Okay, secured creditor retain rights in their collateral and may seek relief from automatic stay. So if like the secured creditors are there, like who has the right in the collateral, so they can go for collateral. Unsecured creditor may serve on the creditors committee which oversee the debtors operation. Creditor may object to discharge or object to plan confirmation. Okay, so creditor must comply with bankruptcy court order and refrain from violating the automatic stay. So as a creditor, you have certain rights and duties, like you have to file for proof of claim, you have to do some meeting. Okay, because if you are filing for proof of claim or if you are a secured creditor, then you will get the priority when the distribution will happen. Okay, next is the comparison between Chapter 7 and Chapter 11. So, Chapter 7 basically is a liquidation bankruptcy where the liquidation of asset will take place and their distribution will be given to the creditors. Trustee take control of debtors' non-exempt property, means the property which is not exempted from seizing. Debtor receive discharge of debt except like taxes, fraud, student loans. So if the debts are related to taxes, fraud, and student loan, then in that case, even after filing the bankruptcy, the debtor will not be discharged of these certain debts. Okay. Creditor must receive the distribution from liquidation proceed. So whatever the proceed, uh, whatever the proceed, it will come from the liquidation of the asset. It will be distributed among the creditors depending upon their priority and their claims. Chapter 11 bankruptcy is basically reorganization. So what the restructure of debt basically take place. Debtor continue to be a business, continuous business. Debtor proposes a reorganization plan subject to creditor and court approval. So creditor may receive payment over the time based on the plan terms. So if you have studied the file, you there this topic comes in for far also that the restructuring of the debt. So when the debtor is not able to pay the whole amount, then he may ask for the restructuring of debt to the creditor. So what happens, the basically the terms and conditions of these debt may be changed, like their principal amount may be reduced, their interest rate may be reduced, or time period may be increased. Okay, this is basically happens under reorganization of restructuring of debt. Is it clear?
Yes.
Okay, so next is automatic stay protection. So automatic stay protection means applies immediately on filing for Chapter 7 or Chapter 11. So when you are filing for this bankruptcy, automatic stay is issued. Basically, it stop the lawsuit, foreclosure, repossession, judgment, and wage garnishment and collection calls. So it secured creditor may request relief from stay for cause. Violation may result in court sanctions and creditor liability. So it is basically the protection for the debtor that from the creditors. Next is your Chapter 11 bankruptcy. So basically we discussed that Chapter 11 bankruptcy is for businesses that they can reorganize their debt while continuing their businesses. uh, Goal is to preserve the going concern value rather than liquidate asset. So debtor possesses a plan to restructure debt and operations. So when there are lot of obligation which a company think that may raise the going concern doubt, then they can go for Chapter 11 bankruptcy. They may restructure their debt, which is more in favor of these basically companies. Okay, debtor in possession means in most Chapter 11 cases, the debtor remains in control of business. So when the debtor has the control of business operations with them, even after filing for Chapter 11 bankruptcy, it is called debtor in possession. So it retains power of trustees such as operating the business, entering the contract. So they may still operate their business, they may still enter some contract, they can make some new contract also, using selling property in ordinary course. So they can use the property, sell the property in ordinary course of business. DIP of fiduciary duties to the creditor also. So debtor in possession has the duty to the creditors. Okay, automatic stay is also there. Like when the companies file for bankruptcy, the order of relief is also issued, which immediately stop all the collection activities, all the collection activities which are done by the creditors, applies to lawsuit, garnishment, and foreclosures, ensures stability for the reorganizing debtor. Creditor may request relief from stay if necessary. Okay. So next is creditor committee. So creditor committee is basically the committee which is committee of unsecured creditor is basically appointed. It represent interest of all unsecured creditors. So how much like they have their claims, can investigate debtor operation and participate in the plan negotiation. So they can investigate about debtors operations, their plans. So this is called the creditor committee. Okay, next is reorganization plan. So the debtor usually has the exclusive right to a reorganization plan for 120 days or it may be extended. Plan basically outline how debt will be paid or modified. So when the court issues automatic stay, creditor committee is formed. Debtor has the right that he can make a reorganization plan for 120 days or this time period may be extended. So under this reorganization plan, so it basically contains the plans how the debt will be paid or modified, operational restructuring, treatment of each class of creditor, or after exclusivity and creditor may file the competing plans also. Okay, so debtor is allowed to prepare some reorganization plan like how they will pay their debt or how they want their debt to be modified, their restructuring, or how they want that each class of creditor may be treated. So if creditor may also file for competing plans like if they found something challenging they can file for competing plans also. Sorry. Next is classification of claim. So how the claims are classified. So when the distribution will happen, so how it will be given. So first, these creditors comes grouped into several classes. So first are secured creditors. Secured creditor means like uh, which have their which have the something as a collateral. So these are secured creditors. So typically the secured creditor has the topmost priority when the distribution is happened. So secured creditors with claim that can be fully satisfied out of the value of the collateral are paid in the full. Any excess received from collateral returned to the trustee. So what whatever the collateral they has, they may sell this collateral and fulfill their claims, and if they have excess of the amount they can give back to the trustee. Next have priority unsecured creditors. So priority unsecured creditors, so these are unsecured creditors but they have filed their proof of claim, so they will get the priority. Next are general unsecured creditors. So general unsecured creditor means like who the people who have not filed the proof of claims. Equity holders then, okay, shareholders. Similar claims must be treated equally within a class. Okay, so what happens? So when the distribution will happen, so first of secured creditors are given, then priority unsecured creditors, then we have general unsecured creditors, equity shareholders. Okay, and rest of the amount will be given equally distributed among the remaining creditors. Next is confirmation of plan. So court must approve the plan. So requirement includes, so these all will happen, then the court will either approve the plan or may deny the plan. So deny in that case, I already told you that if someone is like doing certain fraud kind of thing, not providing their complete documents, then the court has the right to deny their case. So requirements include good faith, feasibility, best interest of creditor, fair and equitable treatment. So these are certain factors on the basis of which your plan may be approved. Cram down allow if some class is rejected but statutory requirements are met. Effect of plan confirmation is basically binding on all creditor whether they voted or for it or not. So that are restructure as described in the plan. So if the court approves your plan which is made in some good faith, feasibility, best interest of creditor, fair and equitable treatment is there, then court can approve your plan, and in that case it may bind all the creditor whether some of the creditors are not satisfied or not voted for this restructuring. Even then they will be bind on this contract, this reorganization. Depth are restructured, so depth, their terms, their principal, interest, time period, it will be restructured. Depth, debtor continue operation under reorganized terms. Okay. Next is discharge. So when debtor receive a discharge after successful completion of the plan. So upon completion of this plan, debtor is discharged from this case. For individual discharge similar to chapter 7, but after plan completion. For corporation, debt is reorganized but entity continue its operation. Okay, so any doubt?
No, madam.
Okay. So next is example. ABC Manufacturing files Chapter 11 due to heavy debt and cash flow issues during the case. Okay, so here the company is filing for Chapter 11 bankruptcy. So ABC act as DIP, so debtor in possession, and continue their business because they are going for Chapter 11 bankruptcy. An unsecured creditors committee will be formed. ABC proposes a plan reducing the debt payment by 40% and extending terms. So their reorganization will take place. So here the ABC has given his plan, which basically ask for reduction in debt by 40% and extending the terms of the debt. So secured creditor agree to modified payment schedule. So if the creditor are agreed to this schedule and it is also made in the good faith and all, then court confirm this plan. Okay, so ABC continue operating, repay the creditor under these new terms. So this is basically a chapter 11 bankruptcy. Is it clear?
Yes.
Okay, so next is chapter 11 bankruptcy. So it is not in much detail in your book. So it is basically chapter 11 bankruptcy is a cross-border insolvency cases. It created by Bankruptcy Abuse Prevention and Consumer Protection Act. So Chapter 11 of US bankruptcy provide a legal framework for cross-border insolvency cases. So it's a basic aim to promote cooperation between US court and foreign court, facilitate fair and efficient administration of cross-border insolvency, protect the interest of creditor, debtor, and maximize the value of the debtor's asset. So it is a based on uh, uncitral model law or cross border insolvency cases, like something related to your international borders or others. So if you have something that kind of matters, then it is filed under chapter 15 bankruptcy. When chapter 15 bankruptcy applies, so it apply when insolvency proceeds involve parties or asset located in multiple countries. Okay, so when their debtor or creditors or like parties whoever is involved in this, when they belongs to multiple countries, means there is a cross border insolvency case, so they can go for chapter 15 bankruptcy. It is initiated by foreign representative such as trustee or administrator seeking recognition of a foreign proceeding, US bankruptcy court. Chapter 15 is not a full bankruptcy case but a supplemental proceeding intended to assist the foreign proceedings. So key definitions are here. Foreign proceedings means a collective judicial or administrative process which is happening in foreign country. So that is called the foreign proceedings. So it can be related to your insolvency, supervision, liquidation of a debtor. Foreign representative means like the person who will uh, or body who will authorized in this foreign proceeding to administer the reorganization or liquidation of the debtor's asset. Center of main interest means the principal place where the debtor conduct the administration of the interest, similar to the company's nerve center. Okay, next is reorganization of foreign proceedings. So reorganization is central in chapter 15. The foreign representative files a petition for reorganization. Okay, so since it is related to your cross-border insolvency cases, so here the if there is foreign representative, he will file for bank reorganization, file for this chapter 15 bankruptcy. The US bankruptcy court then determines whether the foreign proceeding is a foreign main proceeding or foreign non-main proceeding. Means a foreign main proceeding means if it is occurring in a country where the debtor has its COMI and grant its greater protections automatically. So COMI means center of main interest. So if the center of main interest is in the country, the foreign main proceeding will be there. But if it is occurring in a country where the debtor has establishment but not the COMI, means their center of main interest is not there in that country, then it provide limited kind of relief. So what are the relief that will be granted under chapter 15? So once reorganized as a foreign main proceeding, the automatic protection take effect. Automatic stay will be there, the right to operate the business, debtor's business will be there, the prevention of transfer or disposal of US asset will be there. Additional discretionary relief may be granted even in non-main proceedings such as examination of witnesses, entrusting distribution of asset to the foreign representative, and coordinating with other foreign or domestic insolvency cases. So cooperation between US court and foreign court. So since it involves the multiple countries matter, so how will the cooperation will be maintained? So chapter 15 mandate cooperation between US court and foreign court or representatives. These include direct communication. So it may be cooperated by some direct communication, some sharing of information, appointment of representative, coordination of concurrent cases. So court may approve for coordinate case management such as known as cross-border insolvency protocols. So here the protection of creditor and other stakeholders. So chapter 15 ensure fair treatment of all creditors, preventing there may be not any discrimination between the domestic or foreign creditors. So creditors are entitled to notice, participation in hearings, and ability to challenge the action Relief may be modified or terminated if creditors' interests are jeopardized. Okay, so if their interests are modifying or if their interests are like becoming challenging, then this kind of relief may be modified or terminated. Next is limitations and exceptions in this case. So public policy exception is there, like a US court may refuse recognition if the manifestly contrary to the US public policy. So if it is is it is in contrast of US public policy, then they may refuse this recognition. Certain relief may not be granted if it conflict with US legal principle or harms the US based creditors. Okay, so this was all about your bankruptcy. So you may have also a topic in your book which is related to uh, the priority of the different creditors. So how is the uh, priority is given, like who will pay it first? So it is also important, so revise it from your book. Also, like which kind of asset will be non-exempted and which are exempted from this bankruptcy, so you also need to revise it from book. Okay, or when in uh,
Okay.
yes, because short notes are there, but uh, explanation will be in your book only. Okay, so next is our worker classification, federal law and regulation. So our bankruptcy topic ends here. This is new topic which is related to workers classification. So since there are different categories of workers, so how they are classified? First is employee, second is independent contractor. So who will be treated as employee or who will be treated as independent contractor for federal tax, payroll benefit and legal compliance purposes? So common law test is here, like under IRS common law, a worker is an employee if the employer has the right to control the work performed and how it is performed. So a person, if the person is under the control of some other person, like who that person can control their amount of work which they will perform, their nature of work, and their extent, their procedures. So if they are under the control of some other people, then this worker will be considered as the employee. Okay, this test is basically divided into three categories, like they have behavior control. So if the employer has behavior control on those people, then those people or worker will be considered as employee, like how they will their instruction, training, supervision, financial control, then they can control their reimbursement, their compensation, tools, reimbursement, profit loss opportunities, relationship with the parties like contract, benefit, preeminency. So if someone has this kind of control, then these people who are under the control of the other, they will be considered as employee. Next is RS 20 factor test. So it contains detailed analysis with 20 factors. Basically, there are 20 parameters on the basis of which the classification is done. Okay. Next is statutory versus non-statutory employer. So statutory employer, basically certain workers are treated as employee by the statute. So the person which are basically considered as the employees under the laws, like full-time life insurance sale agent, home workers, traveling salespersons. So these are called as the statutory employees. Statutory non-employees means the person workers are automatically treated as the independent contractors. Okay, so even though they have certain they are in under certain control, but they still will be considered as the independent contractor, like direct seller, licensed real estate agent, or companion sitter. So these will be considered as the independent contractors under the law. Okay, so basically consequences of misclassification. So if there is something misclassification, like someone is an employee and you have considered them as independent contractor and the vice versa, then it may lead to serious consequences, including back payroll taxes, okay, penalties, interest, legal liabilities. Is it clear? Form
Yes.
SS8 worker status determination. So either the worker or the business may file Form SS8 with the IRS to request an official determination of worker status. So if you have doubt, you may ask even from the IRS to consider the worker status, whether it will be an independent contractor or it will be an employee. Okay. So under US tax laws, we have certain taxes like FICA and FUTA is also there, like which is unemployment compensation tax. So under FICA, which is basically Federal Insurance Contribution Act, we have the taxes for social security as well as the Medicare. So it is a federal payroll taxes which is basically deducted from your payroll. It applies to employers as well as the employee. So employers will withhold the employee share and also contribute their own matching share. So basically, it can be deducted from the source also, like employer can withhold the employee share and pay their share also. Component of FICA is basically it contains your social security tax and Medicare tax. Social security tax is 6.2% for each employee as well as employer. So overall it is 12.4%. Okay. Your Medicare is 1.45%. It is also contributed by your employee as well as employer. Okay. So here your additional Medicare taxes are also there. Like if your AGI exceeds certain limit depending upon your filing status, then in that case you have to pay some additional Medicare taxes, which is 0.9% of whatever is the additional income. Employer do not match these additional taxes, so this will be only for the employee. Who is subject to FICA? So it can be paid by your employees, your employers, as well as self-employed. So we already discussed, like if you are a self-employed person, you're getting some income by doing certain business, certain work, then in that case you have to pay your self-employment taxes. Okay, these self-employment taxes are basically same as FICA, but you can get the deduction, 50% deduction for the employer contribution part. So here are the employee's responsibilities. So employer has the responsibility to withhold the employee share of FICA, pay the employer share, deposit taxes via EFTPS, file quarterly, provide W2 form to the employee. So W2 basically contain all information related to your salaries and wages part. Exemptions are also there, like certain state and local government employees are exempted. Student working for the same school, they attend some religious group and non-resident aliens. These are exempted under this FICA, exempted from these taxes. Okay. So FICA, as we discussed, it contain your social security tax as well as Medicare tax. So suppose if someone has income of $80,000, so their share of this FICA will be social security tax will be 6.2%. So it will give you this amount. Your Medicare taxes is 1.45%. So as an employee, your share of FICA will be 6120. So since this FICA is paid by your employee as well as your employer, so employer will also matches this amount and it will be paid to the government. Is it clear? Or any doubt if you have?
No, no. Okay.
Okay, so okay, then we will discuss the next topic tomorrow.
Okay.
Okay, so we will continue from this topic in the next class. If you have any doubt, you can ask.
Yes, thank you.
Okay. Okay, then bye. We will meet
Bye
tomorrow.
bye. Thank you.